Welcome to Crypto Plus, where we bring you the latest information on cryptos, blockchains, definance and futuristic investment vehicles. Today is Friday the 9th of July 2021, and we're asking if we're likely to have a crypto crash this weekend, and many think it's quite possible. So let's take a look. Over the past 2 days, the crypto market lost a combined total of $120 billion as sell-offs continued among investors. Bitcoin's price fell below $33,000 support and is trading at $32,821 as at 11:04 GMT plus 1 and is trying to gain back its key support level. It did manage to break key resistance at 36,000 last weekend, but failed to solidify its position and slipped under 35,000 soon after. The general trend for cryptos in recent months have been declining, and particularly we have noticed that prices do also tend to fall over the course of the weekend. Now, admittedly, this has been against a backdrop of rising prices during the week and then a weekend fall. However, so far this week, we've already had 2 days of falling prices, and many people are quite rightly asking, not only are we entering a bear market for cryptos, but could we have a crash this very weekend? Now, before we can address this, we have to look at why prices do tend to fall on the weekend. One reason is low volume, as professional traders are off work and most sensible people are enjoying the weekend break. Secondly, because banks tend to be closed and banking services vary considerably from country to country, and such services often limited. So if traders have to top up their account, sometimes it's not possible, which means they have to sell some crypto to cover losses or purchase other coins. Now, we're not that confident, frankly, this reason is particularly strong, but it is out there and does have a bearing of sorts. However, perhaps more relevance can be placed on what's called margin trading, where traders borrow money from exchanges to trade at high leverage. And if the price of the crypto asset falls below the margin call, exchanges have to sell the crypto assets of traders who fail to repay the loan. This places additional selling pressure on the market. There are other reasons too. Private traders, like those of us listening to this video podcast, have a little more time on the weekend to catch up on the news, especially those who have full-time jobs. We have an opportunity to catch up on videos and news reports on what is happening in the crypto world, and currently, frankly, there is a significant amount of FUD, fear, uncertainty and doubt, being published by mainstream media, and to some extent repeated on media like YouTube and Twitter and Facebook. And we've got more time to read that on the weekend. This obviously provides private or personal investors with concern. And as they may have more time to watch the price, then this can feed into their psychology and their behavior, and many have frightened off their positions. We have to confess it has happened to us too. Sometimes waking up at 1 o'clock in the morning, seeing the prices have gone against what we were expecting, and therefore are selling that particular crypto. Not a sensible thing to do when you're confident the reason you've purchased it in the first place, based on whatever fundamentals there are, haven't changed. But we have to admit we're just testing the market with just a couple of $1,000s. This weekend, perhaps in particular, is noteworthy, not only because we've had 2 days of declines, but also we are aware that Grayscale, in less than 10 days' time, will be opening its doors to certain investors who've been holding their shares will now be released to trade them after a lockdown period. It is thought by many that this could have a detrimental effect on Bitcoin's share price. Others argue to the contrary, but the former seem to have more influence at present. We shall see if this continues. There's nothing like the thought that prices are going to be lower in the future to cause prices to go lower now through advanced selling in anticipation. To add to the fear, it's been published today by the Daily Hodl the following, quote, "A popular crypto analyst who accurately predicted a pair of Bitcoin price crashes says traders should brace for an extended market correction. Pseudonymous crypto trader Dave the Wave tells his 68,600 Twitter followers that previous pullbacks on Bitcoin's logarithmic growth curve indicate that the current correction could extend another 5 months until the end of 2021. The trader accurately predicted Bitcoin's crash from 11,400 to 6,400 in 2019. He also warned traders about bearish Bitcoin price action prior to the late May crash. Now he's saying that the current momentum is mimicking 2018, unquote. This is despite the fact that the trader in question believes that Bitcoin is going to soar in the long term. The second largest crypto by market capitalization is Ethereum, which is on the verge of announcing some important news concerning their next smart contract development. In spite of this and a recent rise in its price, we've begun to see moderate declines. According to News BTC, quote, "There was no major recovery in Ethereum above the $2,300 level. ETH remained in a bearish zone, and it broke the main $2,200 support zone to move further into a bearish zone similar to Bitcoin. The price even declined below the 2,150 support, and it settled below the 100-hourly simple moving average. There was a spike below $2,100, and the price tested $2,050. A low is formed near $2,049, and the price is now correcting losses," unquote. Quite bearish news. At the time of writing, Ethereum is standing at 2080, but we've noticed quite considerable volatility, unfortunately to the downside. So with this in mind, let's just take a quick look at what the market is doing, and we shall then give an assessment of where the market we believe is heading this weekend. One of the sites we certainly recommend you take a look at, which is free of charge to do so, is coinmarketcap.com. And it encapsulates quite nicely the performance of a whole range of cryptocurrencies, starting with the largest by market capitalization, but you can actually change the criteria as well by alternating, by going for the highest price or lowest price, market cap or volume, circulating supply. You have a number of options. But looking at this, I'm just going to refresh it to make sure it's fully up to date. Looking at this, we can see this year, the global crypto market cap is $1.37 trillion. That's a 0.54% decrease over the last day. Very recently, it had exceeded 1.5, and we've seen it recently as low as 1.2 something. So that gives us a guide as to what sort of funds are currently invested or the market prices of the various cryptocurrencies. In terms of market capitalization, which is the order we have this in, we can see that Bitcoin is the first, Ethereum, Tether, Binance, Cardano, Dogecoin, which is a meme coin, and many regard it as a joke coin with little utility, though it's up today by 2%, but it's fallen from over 33 cents in recent weeks, simply because Elon Musk keeps tweeting about it. XRP, USD Coin, Polkadot, Uniswap. A number of these is very serious platforms, and some are, we'll call them meme coins for the sake of it here. So the trend at the moment we can see is generally a fall with most of these coins. And that is giving us an indication of where the market is currently. Looking at volumes over the last 24 hours, we can see the levels of trading volume and we can see the circulating supply. At the moment, Bitcoin's supply is 18.7 million, and the most it will ever be, and this is going to take until the next century. The most it will ever be will be 21 million. Going back to the prices by market cap and the size of the market, we can read here that the total crypto market volume of the last 24 hours is 72 billion, which makes a 9.34% decrease. The total volume in DeFi is currently 7.2 billion, 10% of the total crypto market 24-hour volume. The volume of all stable coins is now 55 billion, which is 77% of the total crypto market. Bitcoin's price now is $32,920, and its dominance is currently 44.98%. And what's important here, Bitcoin has dominated the crypto market, and in whichever direction it's moved, the vast majority of other coins have moved in the same direction. The lower the dominance becomes, the less that will be the case. And it was well over 50 not that long ago. So we have to bear that in mind. It's still predominantly the major cryptocurrency in terms of market move. But other currencies are breaking away from that dominance as time goes on. And we can see that now with these moving into negative territory, while Bitcoin is, albeit marginally, in positive territory. Just wanted to alert you to this particular site, and it will cover a vast array of the cryptocurrencies that are available, or certainly 5,592 of them. We understand there are over 10,000 in existence. Our assessment for the weekend is that we are expecting weaker prices, though not a rout or a crash. Of course, we still have to wait and see what happens during the course of today, but as the markets are permanently open, unlike the equity markets, it's somewhat a misnomer to say what's going to happen today or tomorrow per se, because each rolls into the other. Most analysts believe that the top few cryptos have a long-term sustainable and profitable future, whilst the majority will go to the wall. Personal or private traders, however, do have a tendency to look at day-to-day prices, and their decisions are often based upon short-term movements, while investors tend to hodl or hold for the longer term. And so far, those that have done so with the major cryptos have had thousands, and in some cases millions of % increases. What do you think will happen this weekend? Higher or lower prices? Please share, but before you go, kindly give us a thumbs up because it helps the YouTube algorithm. If you haven't done so, subscribe to the channel, press the bell sign, and look out for future videos. And also tomorrow we shall be interviewing Nikki, who will give us an up-to-date position on her portfolio. Thank you once again.